Thank you so much, Dave. Thanks for having me today. Today, my topic is spotting Elliott wave setups with the Wavy Tunnel Pro across global markets. Just a little background on myself. I began my trading career at JP Morgan, where I traded currencies for 15 years on both Wall Street and Bay Street. And since then, I've dedicated my work to helping traders build structured trading businesses. And today, I trade and coach at FX Traders Edge. I trade futures, forex, stocks, and options using our Elliott wave based framework, the Wavy Tunnel Pro, which I'll be sharing with you today. So first, the disclaimer. I just need to share this. Everything that I share today is for educational purposes only. And as always, trading involves risk. Over the years, I've come to believe that markets move very much like a pendulum. In my book, The Trader's Pendulum, I describe three forces of market behavior. The first is the market pendulum, which represents price structure and cycles. The second is the financial pendulum, which governs capital, risk, and reward. And the third is the emotional pendulum, which reflects fear and greed, the psychology that drives traders to extremes. And Elliott wave theory is one of the best frameworks we have for understanding how those emotional swings create repeating market patterns. So then the question becomes, how do we turn these patterns into actionable trades? And that's where the Wavy Tunnel Pro comes in. Recently, my work has been featured in these publications. But what's more important for me is helping traders how to apply these ideas in a practical way. And that's what we're going to focus on today. So what you're going to learn today, we're going to go through the 5 core Wavy Tunnel Pro setups and how they align with Elliott wave structure and market psychology, and then how to spot these setups automatically. And we'll give live examples of each setup. And how it's important is how to trade with structure, not emotion. And finally, I'm going to show you how to join the Wavy Tunnel Pro Accelerated Training. It's on demand. We just finished the training last week, so all of the videos are there, hot off the press. You might consider joining, but that's at the end. So what process do I follow to find trades, execute with confidence, and manage risk effectively? Over the years, I've found that consistent trading really comes down to a very simple framework. I call it the simple 3-step playbook. First, we analyze the market structure using the market map. I'm going to show you the market map today. Second, we apply the Wavy Tunnel Pro setups, and that's the strategy. So whatever strategy you use, that would fit in here. And third, we manage the trade for optimal risk reward, and we use trade management. So let me quickly connect the dots between Elliott wave, Fibonacci, and how we actually trade this structure. Analysis, the first step to consistent trading is understanding the market context. And the market map helps us to identify the trend, what trend are we in, and anticipate possible future scenarios. And prepare for high probability opportunities, because none of us have crystal balls, but there are opportunities that are more high probability. And this is the complete market cycle. A 5-wave move up followed by a 3-wave correction. So today, I use this, I'm going to show you my market map using the Wavy Tunnel Pro structure, but I use this to identify where we are. So for example, I know that if we're on this side of trend, I can anticipate a big move down. And notice how all of these patterns in this complete market cycle are familiar to you. At the end of every swing move, we have head and shoulders patterns, reverse head and shoulders patterns. So this is a very familiar, probably very familiar to you. Most investors feel greed at the top of this structure at point 2. And Optimism and exuberance are at its highest levels. And then after this ABC correction, which can be significant, as you can see on the chart, we often see fear and panic, and traders feel like bailing out. But successful traders learn how to reverse that instinct. It's changing the brain. As Warren Buffett famously said, be fearful when others are greedy and greedy when others are fearful. That's the contrarian view. So we almost need to switch fear with greed. And up here, we want to feel panicked and bail. And down here, we want to feel optimistic to buy. So our goal as traders is to train our brains to recognize when the markets are reaching those emotional extremes. So up until now, we've been looking at this market map, the complete market cycle described by Elliott wave. The challenge for traders is that waves are often difficult to see in real time, which is why the wavy tunnel, that's where the wavy tunnel comes in. The Wavy Tunnel Pro setup helps visualize that same structure directly on the chart. Instead of guessing where we are in the cycle, the Wavy Tunnel Pro helps us to see it objectively on the chart. So I was never a consummate Elliott wave counter. When I worked at the bank, I always hired an Elliott wave technician to sit next to me. So this Wavy Tunnel Pro strategy is really great because I can visualize it and see where we are over here, which is my market map. So we're going to go through some of these setups today so that I can teach you what I see on the charts. And that brings us to the second part, our clear strategy. A clear trading strategy helps us to identify the entry point, to find the stop loss, set the profit target, and know when to trade and when to stay out. Removing the emotions from the decision is key. Now, in our strategy, we have 6 Wavy Tunnel Pro setups, which I'm going to share with you today. But this is really the trade plan. Every time you take a trade, you need to think about what you're doing instead of just winging it. Think about like what the entry point is, where your stop loss is, and what you're looking for in terms of profits, and when to stay in the trade. Okay, and maybe take 2 or 3 positions and hold part of it in case it goes further than you anticipated. The Wavy Tunnel Pro framework is built on the combination of several powerful market principles. First, the Elliott wave. This helps us understand the rhythm of the market cycle. I showed you the market map. And then everybody's familiar with Fibonacci. It helps us with the timing and symmetry within those waves. And harmonics. Harmonic relationships can help identify potential price targets. And momentum tells us whether this move has strength or is beginning to exhaust. So when these elements align, they create the setups we look for with the Wavy Tunnel Pro. And from that framework come the 5 core Wavy Tunnel Pro setups that we use to trade the market. And these are them. So these setups allow you to trade both sides of the market. So you might trade stocks, futures, Forex, do options. They allow you to trade both sides of the markets. It's simple, visual, rules-based, designed for clarity and repeatable execution. The start of the trend is the breakout 1 trade. This is the trend kickoff. This is the wave 1 trade. And then we have trend expansion, which is the trend trade, the actual trend trade. So breakout 3 is the trend trade, riding the wave 3 momentum or riding any wave momentum. And then the breakout 4 trade is the breakout, again, in the direction of trend after a pullback. And in Elliott wave analysis, we call that a wave 2 or a wave 4. So after a pullback, I'm going to show you lots of these breakout 4 examples. And then we have the trend reversal, which is the price to the wave, and then the fill the gap, which I'm going to show you about. That was that ABC correction that we saw on the right side of the chart on the market map. So the end of the wave 5, okay, and then the ABC correction after completion. So I'm going to show you the trend reversal trade as well as the breakout 4 trade today. And here it is, the same wavy tunnel pro setup on our charts with the market map down below. So you can see, identify with this market map where we have the trend move. We have a market peak. This is point T with the purple diamond. And then we have a significant move down below the tunnel. This is the tunnel for our ABC correction down here. And this is the fill the gap trade. It's the gap between the wave and the tunnel. So what are these moving averages? You can put them on your charts right away. The filter is the 12 EMA. The wave is the 34 EMA on the high, low, and close. And these are all Fibonacci averages. And the tunnel is the 144 and the 169, all from the Fibonacci sequence. So when the wave is above the tunnel, we're in an uptrend. When price is bouncing off the wave, those are our, I call them our trend, our breakout 3 trades. We don't know if we're in a wave 1, a wave 3, a wave 5. It doesn't really matter. What matters is that the trend is still moving higher, and that's the trade. As soon as the wave starts to flatten out and we start to break down, that's where we anticipate a major pullback. So let's look at some examples. So today I'm really going to show you, it's more about the education. I have updated the charts, but it's more about the education because I want you to, understand this and begin to implement this. Even if you don't join the training, you can certainly use this with your strategies that you're using as an overlay, because this is about market structure. So let's talk about the PW and the fill the gap trades, how to spot the end of the trend reversals. Well, the first thing that we look for is we look for divergence. Price makes a new high, the awesome oscillator makes a lower high. This tells us that the market is running out of steam. And it happens twice here. Twice we see divergence. Is divergence always this perfect? Perfect meaning that we have divergence at the end of the move? We don't always have divergence. And I can't tell you the percentage of the time that we do, but it's a high percentage of the time. But sometimes we have such a steep trend move up that we have a peak in the oscillator and we don't have divergence yet. And then it starts to come down. So that happens sometimes. We use the awesome oscillator to identify exhaustion point so that we can enter, like we're more confident to enter. So that's the price to wave fill the gap. Here are 2 other charts. The price to wave, this is a bullish price to wave fill the gap. So the price to wave is, you see the purple diamond, you have divergence. It's a move into the wave and then a move into and above the tunnel. That's the PW fill the gap. So when we get a purple and these are our proprietary indicators, the diamonds and dots here. But what we are looking for this profit taking target is the gray diamond. So from purple to gray above the tunnel. So that's what we're looking for. And we have the bungees here as well, and they tell a whole other story, which I'm not going to get into now. That's for the training. So this is called a bullish PW fill the gap trade. And when you see this on your charts, you're looking for a move back above here. On the right, we have another example, and then I'm going to update these charts to see what actually happened. We have a bearish PW fill the gap. So we have divergence here, nice divergence. So that can alert us to, gee, maybe we are going to come down a bit. And we also look for not only divergence, but we also look for a 1, 2, 3 reversal at market peaks and at market bottoms. But that's what we do look for. So here we have the price to the wave, and then we have the fill the gap trade. And we're looking for a gray semaphore below the tunnel. That's our profit target. Here's Apple. Everybody's familiar with Apple. Here we have the divergence. Now here we have triple divergence. Sometimes we get triple divergence. So if you're here and you see divergence, that's fine. We might have a nice correction into the wave, but if we don't go below the wave and start to trade up and make new highs, then we're probably going to get triple divergence, and that's what we got. So this is only showing us what could happen if we have divergence. But if we don't start, if the price action doesn't start to break down, then it means that this is a smaller three-wave correction into the wave again, and then we're going to make new highs. And then we come down and we get the gray arrow. So after the PW fill the gap, price to wave, fill the gap, this is when we spot the wave 4 end, call it the breakout 4. It could be the end of a wave 2 or a wave 4. Again, I don't count the waves. I count the waves through the Wavy Tunnel Pro. Then we're looking for a move up. Now, it can be a blast off, but it doesn't have to be a blast off. I should probably change that. The wave 5 move can take us to new highs, or it can just take us to a more of a consolidation that can take a little bit longer before we make new highs. And this is where we are today. This is the price action that happened since we got the gray diamond over here. We traded up and then we came back down again. We call this the gray, yellow, yellow, and then we started to head up again. So this is a nice, really sideways consolidation. It's a corrective pattern, or it could be the start of the wave 5 move. I don't know. Okay, I don't know. But as long as this stays intact, then I would be bullish for moves up unless we break below here. If we break below here, then we're going lower. In my estimate, that's how I read these charts. So going back to the two charts that we looked at for the bullish price to wave, look what happens. This now turns into a breakout 4. So the price to wave is one trade here, and now this is the breakout 4 trade. So in this case, it would be a sell trade, and we're going to update this chart to see where we've gone since we posted this. And this is a sell-off and the breakout 4 buy trade. So let's go back to active. On the left is where we had the breakout 4, and on the right, this is where it took place, and we're heading down. Like we're right now down here at the 59 level. So we have broken down after this breakout 4 sell. In the least case, you want to get out of your longs if you're long. Like that's in the worst case, you just get out of your longs. You don't have to go short, but because not every single short trade is going to work. In this case, it definitely worked. In this bullish case, this is interesting, an interesting case study. So this is the profit target for this trade. But if you do want to go long here, you leave a stop below, obviously. And you're looking for, on the right, was taken this morning, you're looking for a move higher above this level. You can set 3 profit targets, working your way down and hopefully get profited out of a couple of them. But this is an example of where we don't go any higher here. We come back down. We're trading sideways. This low is still intact, but we're trading sideways. Are we going to break out and move above here? I don't know, but we have to be aware that when we get these swing points, this is part of the corrective process that we're seeing right here. Okay, it's part of the corrective process that we're seeing, or it could be the start of a move up. We don't know. Now, I want to show you some of the ETFs. So the SPY, this was taken today. Notice how we did have the price to wave, and we have divergence here, nice divergence, okay, between this point and this point, nice divergence. But we moved down way more than the tunnel, so this is no longer gray, it's purple. We're still in an uptrend on this because the wave this is the daily. The wave is still above the tunnel or in the tunnel. It's not below the tunnel. As long as the wave is above the tunnel, we're still in an uptrend. So this was actually, hold on, my mouse. This was actually not the picture perfect trade with the gray, but it presented the exact same way, where price came down to a viable area and then took off from there. We made new highs. Same with the Qs. We came down to a viable area. The wave is still above the tunnel. Now, if the wave crosses down below the tunnel, then bets are off for the breakout 4 trade. It means that we're probably going to go lower, but the wave has held the tunnel. And so that's a bullish sign. That's obviously, that's good, because we started out by saying when the wave is above the tunnel, it's bullish. And we anticipate this major correction. We can anticipate that once we start to break down and once we move from this side of the chart to this side of the chart. Now, this is a long and steady correction. It took a long time to play out. So I would label this an A down to the yellow, a B down to the yellow, and a C down to the purple. Now, on the next chart, I'm going to show you the weekly, what happens here. Typically, when we do see a move like this, and if the wave happened to cross the tunnel down, which it did not, then we would look for the weekly for its price target down here. But the weekly stopped midway in between the wave and the tunnel. And it does that because the market was extremely bullish. Okay, a lot of pent up demand here with the geopolitical situation, a lot of pent up demand. But the Russell 2000 got the gray. This was your breakout 4 setup right here, and then that took off as well. So really, all of the indices caught their bottom at the same time and worked their way up. This is an ETF case study for XLY on the 60-minute. I took this today. This is where we are. So we did the PW fill the gap. This is where we are, and this has to be watched. I mean, this is last night. No, this is today's candle. So we did complete a fill the gap. I really do like this to come below the tunnel. It doesn't always have to do that. Now, the next charts that I show you are on the futures markets. They're not from today. They're just case studies. So they're old, okay? Just so you know. But this is the 5-minute NQ, and we have a PW fill the gap trade right here. And then we get the breakout 4, we got the gray diamond. And this happens quite a lot. And then we make a new high, we have beautiful divergence, and we get the gray diamond for the breakout 4. So this pattern repeats itself. This is on the 5-minute chart. It repeats itself. Now, in this case, as long as the wave stays above the tunnel, it's bullish. As soon as the wave starts to crack below the tunnel and trade decisively below the tunnel, this chart is going to trade lower. I mean, this is an old chart, obviously. Trade lower, and we would expect a purple diamond. And we would expect this look below for bearish. Here's another example. This is a 1-minute chart. So these patterns show up. This is on wealth charts. This was on TradingView. These patterns show up on every time frame. They're fractal. The markets are fractal on every time frame. So this was a purple, and it turned to gray once we made a new high. But this was a nice setup on the 1-minute chart. Okay. Here's gold, also on the 1-minute chart. Now, obviously, if you're going to trade on the 1-minute chart, it's a day trade. So you need to do a lot more analysis than just buying here. You've got to be bullish on the day. If you've got to do your analysis first, look at your market map on the bigger time frame. You're not just going to trade these signals. Obviously, you have to do your work and see that you're in a bullish scenario. And there's a lot of work that I do, like to just get set up. Not a lot, takes a few minutes. And then I know what I'm looking for in the futures markets when I trade the futures markets. And this is what we learn in the training. We go through that, what you need to look for from the overnight markets, etc., in order to take these trades. Here's a 15-minute trade. So this is just showing you that the markets are fractal. You're going to see these patterns on all the different time frames. Okay. Okay. Oh, I haven't been answering your questions. All right. Breakout. BO stands for the breakout trade. So the breakout 4, the breakout trade, it's just a name that I came up with. I'll show you a summary of that shortly. Okay. And this is the 4 hour. So same pattern where we have a significant sell-off. Okay, same pattern where we have a significant sell-off. Okay. So we have the Wavy Tunnel Pro on various platforms. We have our Wavy Tunnel Pro dashboard scanner. A lot of the charts that I showed you earlier were from our dashboard scanner. It scans almost 5,000 instruments. And we have all of our trades programmed in this scanner. The breakout 4, which I showed you, the PW fill the gap, etc. And then we have our indicators and scanners, which I haven't shown you, our indicator suite and scanners on MetaTrader 4, NinjaTrader, MotiveWave, and TradeStation. And then we have just the indicator suite, no scanners, on Wealth Charts and TradingView. So just to show you what else you can do with these setups is we have automatic trend lines that are drawn. This is MT4. So I'm just pointing out the divergence here. And then we have an automatic trend line break. You get the up arrow. And this is where the profit target is. I mean, the profit target just automatically shows up. It's something that we programmed, and we teach you what to look for. And then we have our breakout 4 sell trade here with trend line breaks, okay, at the same time. So this is trend line breaks with targets on our MT4 platform. We have it on NinjaTrader as well, the automatic trend line breaks. So the automatic trend line breaks on NinjaTrader, and here we had the breakout 4 trade up here, and it automatically spits out the targets. And this is just a function of the distance from this low to this high, and this can be programmed in. I had it pretty conservative, I think 38.2, 50%, 61.8. That's what I programmed. So all 3 profit targets were hit for that trade. So that's NinjaTrader. So this is to summarize. Let me just see if there is anything else, any other questions. Do you have any products for Think or Swim Toss? So we do not, but you can certainly, we can set you up on Toss with all the moving averages and you just can't get the semaphores, the diamonds and the dots. So these are the 5 core setups: the breakout 1, the breakout 3, the breakout 4, the price to wave, and the fill the gap. So the breakout 1 is the wave crossing the tunnel. That's the new trend. The breakout 3, I showed you this, wave 3 momentum, strong trend expansion. The breakout 4, these were the case studies after an ABC wave 2 or wave 4. It's a breakout toward the wave 5. Okay. And then the price to wave is the wave 5 reversal, price returning to the wave for a bounce or a reversal. And then the fill the gap trade is the gap between the wave and the tunnel. It's a deeper ABC correction. And this is what it looks like on the charts once again. In summary, identifying entries and re-entries, end of trend and trend trades. Gray arrow, start of the trend, trend begins. So this is the gray arrow, 1 and 1 over here. The blue and the red dots, entry triggers for the breakout 3 trades. And this, we can scan for these entry triggers for the breakout 3 on the dashboard scanner. And then the purple arrow is the end of the swing. So here we have the purple arrow, that's number 3, the end of the swing move. So these, we teach you how to read these, and you want confirmation, like how to get the confirmation that you need. Like these, you're not just going to trade these signals. These are not signals that you trade. You need to understand when when this is going to reverse and trade accordingly. It's not a crystal ball. It's high probability assessment. So learning the wavy tunnel framework. To trade this framework consistently, you need a clear roadmap of the market cycles, an understanding of the market cycles. You do not need to be a consummate Elliott wave counter, but if you do follow any Elliott wave analysis from any one of the analysts out there, and we have our own as well, then you can use the Wavy Tunnel Pro to take the trades as confirmation, because it's a very structured strategy for these 6 different setups. Well, I showed you 5 different setups with rules for entries, stops, and targets. So you can practice applying the setups on real charts. That's what you need to do. Demo account first, of course. So the Wavy Tunnel Pro 5-day accelerated trading and mentorship program, and this is on wavytunnelpro.com. We did this 5-day accelerated trading starting April 19th. And I was there for 5 days with the students. Everything is recorded. So it's not too late to join the Wavy Tunnel Pro accelerated training. There's a tremendous amount of videos in there, and it's a very organized, it's very well organized, as you will see if you join the program. So the program is for new traders looking for a clear trading roadmap, for experienced traders looking to improve consistency. And I would say that really everybody in the program, they had a fair amount, they had some experience in taking the program, and some had a lot of experience, and they absolutely loved it. Traders across all markets. So we had some Forex traders, futures traders, stocks and options traders. I didn't have any cryptocurrency traders in it, but certainly you can learn the patterns and trade all of the market asset classes. So the 5-day accelerated training includes complete Wavy Tunnel Pro strategy and course manual, Elliott wave and Fibonacci and harmonics framework, real chart trade examples, unlimited access to the training. Okay, unlimited access to the training. Bonuses, if you join the Pro, you get 2 months access to the Wavy Tunnel Pro desk with Pro, which includes the Elliott tools and scanner for Forex, stocks, commodities, and crypto. Market Outlook video 4 times a week. And 2 months access to the Wavy Tunnel Pro dashboard scanner, one-on-one coaching session with me, and a Wavy Tunnel Pro trade analysis mastermind. So it gets you to see 11 student trade reviews. The real question isn't about price. The question is, how long will it take to figure this out alone? How much money might be lost through trial and error? And how much faster could progress happen with a clear framework? Learning from experience is valuable, but learning from a structured process is much faster. So I want to thank you for being here live. Thank you, Dave, for inviting me. Clarity, confidence, consistency, that's the Wavy Tunnel Pro. Join today. And you can scan or visit wavytunnelpro.com. Now, I always ask the students that are in the class, you know, how would you rate this on a scale of 1 to 10? Every single person in the class put a 10 down. So I'm just saying, I mean, they did. Like there wasn't even a 9. So I was really, it gives me great joy that traders are really loving it and they see the opportunity, they see the possibilities, and I'm here to, you know, to share my experience. I've been trading since 1980. So that's a very long time. And that's it. That's all I have to say for today.